Well, g'day there, traders and friends, market participants and enthusiasts right around the world. Thanks a lot for joining me on this Tuesday afternoon market recap. What we have seen during today's session is, again, a little bit of a breakdown when it comes to market synchronicity. We're starting to see divergence continue to form, and at least the markets remain rather bifurcated. Now, as I move into this, or before I move into this afternoon's recording, what I would encourage people to do is look at the video I released 2 days ago. That was as at Sunday, and we began to speak about, or at least continue the discussion around some of the signals that are setting up in the backdrop to not only the NASDAQ, but also very much so on the Russell 2000. Now, today, the Russell 2000 absolutely got belted. So did the Dow Jones Transportational Average as well. And we do have an interesting signal which has established itself on the NASDAQ. So we are going to go again, or at least continue with that original discussion that took place on Sunday. But again, this is something that we have been speaking about in that pro analysis class for a number of months, and also have made mention of it even on this in this sort of public arena as well here on YouTube. So what we have today on the NASDAQ is that of a bearish counter attack. If I zoom in and show you this, you can see that we gapped up. Obviously, that was attributed to that of Google's earnings. I believe Google closed up $41. It was a very powerful day on Google. That obviously helped the NASDAQ gap up above a lot of this resistance that we have been forming throughout the month of July, this very short-term resistance. And again, this is coinciding at an all-time high. However, what we did was we actually reversed intra-session today. We sold off and we more or less closed unchanged as to where we were on Monday. This candlestick pattern here is a 2-day slowdown, if not a 2-day reversal candlestick pattern, and it does open the door for potentially that of a false breakout to the upside. Having said that, I love these candlesticks to actually place bullish trades off, because we do have a very defined upper sort of resistance area that has formed during today's session. So what we can say, or at least come to terms with at the moment, is that yes, we do have a bearish reversal candlestick signal. I'm glad that we didn't get whipsawed into this trade. However, if we do start to push on up above 7957, we can open the floodgates for the NASDAQ to continue higher. And the reason I'm saying this is because today, on the Dow Jones Industrial Average, we did close up very close to 200 points. We still haven't definitively broken above the June swing high, but this trigger up here at 25,449 is very, very current. And it looks as though on the short-term sort of molecular view of the level, it does look as though we are breaking out of this sort of bull flag pattern, which is looking very nice as we have continued to pull on back into these rising exponential moving average. And we have seen, of course, a reaction take place today, being the close on Tuesday. Now, where this gets interesting is when we begin to look at the S&P 500. Again, before we move into this market, I just wanted to say I am going to touch on the Transportational Average and the Russell 2000 because it is very important as at this Tuesday close. But before we get there, let's have a quick look at the S&P 500. This is quite interesting, again, because today it was looking as, or at least over the past number of days, it was looking as though we've been establishing that of a bull flag. The bull flag appears to have broken to the upside. However, what we have is that of a doji candlestick. It's not the nicest of candlesticks that you want to see, especially after a pretty decent formation in terms of a bullish continuational pattern. What we also have is that of a gap, a very slight gap between Monday and Tuesday. And a lot is going to be riding on what happens during Wednesday's session. We are pushing up very close to our target. This has been our target since more or less we have pulled on back down and established that most recent higher low. And again, we're pretty close to it. We're only really 30 points away from this 2,852. But this candlestick pattern here mixed with the gap is telling me that the S&P 500 is looking a little bit exhausted. We've been long the S&P, or at least the SPY, from 2767, actually gapped above it on this particular candlestick just here. This was Monday, really 2-3 weeks ago now. So again, I encourage you to play defensively. I would encourage you to bring your stop up, potentially place it really below Monday's candlestick and just lock in that profit, guarantee it, and also have a hard sell at our target up here at 2,852. This is, of course, the open window, which is still needing to be filled. This is taking us all the way back to the first calendar month of 2018. Once we get here, I think we are going to see a little bit of selling pressure flow into the markets. And the reason I say that is because we've been looking at, actually, I'll start with the Russell 2000. We've been talking about the narrative, or at least the story behind the Russell 2000 when it comes to this breakout and ultimately our target. Well, this is the third actual push into this sort of resistance area around 1,700, and it looks to be failing, or at least resistance again continues to remain rather solid. You can see we closed down 18 points today, but this is a very bearish candlestick, and it does look similar to the sell-off that we saw towards the back end of June a couple of months ago, or last month in fact. If I bring up these exponential moving averages, this is what's most important. I still have a target on the Russell 2000 just shy of 1,740. We don't necessarily have to get there. I do think we are going to get there. However, But if we start breaking down below this rising 50 exponential moving average, that is the first major sort of sell signal on the Russell 2000. Also, if that does trigger, you need to pay attention to the swing low over here. But most importantly, and this is what I rank above at the moment, the exponential moving averages and this swing low just here, is this trend line, which has been in effect since really the majority of 2018, since the Russell 2000 stabilized after the waterfall sell-off, much like the other equity markets that you've just seen on my screen. So if you project that into the future, this is going to, or at least if we pay attention to the last couple of trading sessions in the month of July, this is coming in at about 1,625. That's going to be the critical line in the sand for the Russell 2000. It more or less aligns quite nicely with the most recent swing low. But this candlestick here mixed with the bearish counterattack on the NASDAQ, the doji on the S&P, where it's sort of showing the momentum at best slowing. And of course, the Dow Jones Industrial Average, which has sort of bucked the trend and appears to be breaking out. What we can establish is that, one, resistance is holding, momentum is stretched, and it looks as though we are potentially trying to turn, or at least the markets are trying to turn. And this is after, again, that quite sort of healthy response to Google earnings, which I will touch on in a couple of moments. Before we get there, however, I just wanted to show you also the Dow Jones Transportational Average, because again, similar to that of the Russell 2000, we have a very bearish candlestick which has developed as at the close today. This is what we call an outside day engulfing candlestick. It is a bearish Morobozu candlestick, and it is showing up also at a very important resistance area. This is coming in at about 10,800 on the transportational average. And the reason why this is so important is because we still haven't actually reclaimed the highs, just like the NASDAQ has done most recently. In fact, we're back to the lows, or sorry, not so much the lows, but back to sort of resistance areas / support areas recently that we've been trading at since February 2018, most recently after the sell-off. So we're not really gaining any true sort of grid or traction as we've been pushing on and up. It's looking very similar to that of just a sideways channel. But when you see these candlesticks develop, and you can see that we've got this engulfing candlestick very close to these exponential moving averages, and if I bring up these oscillating indicators as well, you can see for yourself that we have mentioned in the past, or most recently, that we are relatively overbought. It hasn't been all that much of a concern. We haven't really had a vested interest in, say, for instance, the transportational average or the Dow Jones Industrial Average or the NASDAQ. We've sort of avoided these markets. The S&P 500 is what we have had exposure to, and that is still profitable. But again, you should be thinking defensively. But going back into the discussion of the transportational average, you can see this. When you get this engulfing candlestick pattern at an area of resistance that we failed to break above and sort of hold above for any prolonged period of time, and you've got these simple moving averages which are very close to price action, it makes you wonder whether or not we are ultimately going to break below these simple moving averages and potentially come on back down and retest some of these lower areas of support. In the past, I have mentioned these bullish trend lines that have been in effect since 2009. I've also shown you some very important trendline extensions off from the Russell 2000. Again, I would encourage you to go back and have a look at that video, which I posted on Sunday. But it somewhat opens the door, and I'm not calling for this at the moment, but it wouldn't surprise me if we do see continued selling pressure on the Russell 2000 and the transportational average to see this actually come on back down and actually overshoot 10,000. Maybe even drop as low as 9.5 if we are to see these long-term simple moving averages break, but then of course still remain in a macro bullish uptrend. It's very important for you to understand that we can have these intermediate movements in conjunction with the primary bullish trend line and still remain bullish overall. It's not until we start to crack below some of these long-term primary bullish trend lines that we have on my screen. It might be a little bit hard for you to make out because, again, I'm sort of condensing a lot of information into this and you can't really sort of see where these long-term bullish trend lines are. I can zoom out and try and bring it into a picture for you, but really the one which is sort of the line in the sand for this market is probably coming in all the way down at 8,250 before we would have to become extremely concerned of the dynamic of sort of the larger primary trend. But I guess on the minor level, which is what we look at as short-term technical swing traders, especially after today's session, we are starting to see some troubling signals. The only market that is rather resilient is that of the industrial average and the S&P 500. Both of those, or at least the S&P 500's candlestick, at the end of the day, is that of a doji candle, which again reflects short-term indecision. It is just generally the bifurcated state of these markets that we have been working with for a little bit of time. Now, obviously, today we saw Google's earnings gapped up $47, or at least it closed $47. We tried to actually begin closing this gap during the session today on Tuesday, but really we saw a nice rebound, or at least a strengthening off from this gap. I love these types of candlesticks. Okay, I love these types of candlesticks. And what we can essentially do is say to ourselves, well, look, if Google begins to break really the highs of the candlestick, I'm going to allow some additional price action on this. really 1,284. It opens up the door for Google to continue to trend. However, what I think is going to happen is that it's going to sort of do something very similar or close to that of IBM, where you get the gap up on earnings, you have that established open window, and then it becomes a process of definitively closing the window, building support, and then using that as a base to bounce off from. So when you think about Google, it is a go, or at least a green trade, so to speak, for a breakout above 1,284, but at the same time, you don't want to short against a rising individual stock. You'd rather look for and be patient for potentially an open entry at 1,200 or very close to this open window if you do see it trickle down and sell off over the coming days, if not maybe a week or so. And then base yourself off from these rising exponential moving averages moving forward. So just wanted to recap IBM for you. Also, I can just quickly rotate through some of our top 12 trades. You can see that not a lot is really happening. If you are in Apple still from about 188.91, I would encourage you to actually close this, especially close this before the week is out. We've been very lucky to see this bounce take place between Monday and Tuesday, at least continuing from last week after that sort of stagnant range bound period. I would encourage you to close this out and be done with it more or less at current levels. You've got the swing high over here. And again, you've got earnings later, or at least very soon coming up. A lot of our stocks are reporting earnings. You've got Amazon, which is set to report earnings as well. Boeing Airlines set to report tomorrow. So you can see of our top 12 individual trade list, a lot of these companies are in a rather sort of untradeable process. And it syncs rather quite well with the overall market analysis. Again, Baidu, earnings coming out in 2 days' time. We have Caterpillar later this week. COP is also scheduled to report. I believe on Thursday we have CVX. I mean, you can just go through some of this list. I'm glad that we've got through, or at least progressed through Google. That's good. IBM reported last week. Also, we have Netflix that reported last week. But again, moving sideways, you can see this as well. No real tradable activity. And Tesla today trying to break down, which is quite interesting. Earnings is scheduled for the first session in the month of August, which is going to be interesting because I have been relatively bearish on the stock of Tesla for quite some time. We're just going to have to see how the market participants react to that earnings announcement. But really just to sort of surmise this video and to close this up, we are starting to see some concerning signals. Candlestick patterns, 2-day reversal patterns, especially on the Russell 2000 and the transportational average. And we have seen a slowdown in the candlestick, very important, very relevant to that of the NASDAQ up and around its most recent all-time high, which is just more or less closed a matter of minutes ago, a matter of moments ago as well. So think about that. Again, if you're in the SPY, it is a profitable trade, but I would encourage you to play defensively. I wouldn't be fooling around with this all that much. You could either place it between Monday's low, or even if you wanted to become very aggressive on the actual stop on this trade and lock in as much profit as possible, you could even put it below the low, the intraday low of today's session, and then just look to sell out of this if we see any pop to begin Wednesday's session and then continuing into Thursday as well. A very hard stop at our target up here at 2852 if we get there. Over the next couple of days. Okay, if you have any questions, email me, success@pivotpoint-trading.com. I wish you all a very pleasant evening, and I'll be back with you tomorrow for another market recap. All the best, everyone. It's James signing off on behalf of Pivot Point Trading. Farewell.